Hi and welcome to the market alert for Wednesday, the 5th of August 2020. So bonds and bullion bid to new record highs as stocks seesaw on stimulus scares. And that's because in the US, not only was it no news Tuesday, which can, as I said in yesterday's market alert, can see the market trade very quietly in a narrow range, which it ended up doing after the first hour. The main reason is that we've got a problem with the deal that Pelosi's trying to put together. House Speaker Nancy Pelosi says she doesn't think there will be a deal this week, and you can understand why when you start to get into the figures. Democrat up stimulus demand to 3.4 trillion. This is just incredible, isn't it? As I've said before, this is a bit like being in the shallow waters of Niagara Falls, not realizing that you're only a few feet away from going over the edge. It's just insane. And again, you can see that gold has extended its gains because of what's going on. Purdue warned Senate stimulus talks may take another 2 weeks. And it just goes on. I mean, there's no end to it. So anyway, let's have a look and see the impact of this yesterday. I spoke about the market trading up to the highs in yesterday morning's market alert. It did after trading down to the 200 MA, and then prices as we move forward. You will see the potential weakness there, and then the market opened. And before it opened, I had a look to see where we were in the bigger picture, just get an idea. We've got the 20 bar moving average there and the 78. Just to refresh, and then prices shot up to the BRN, and then we see the selling coming into the market here. And then prices again show further selling at the BRN and head below the 5 bar moving average, and then the 20 bar we see a bit of support coming into the market, and eventually prices break down as the shorts take profits. New selling comes into the market, and prices once again find some support in the high. No surprise there. So you got support at the high with buying coming in, but once again prices fail to move off this, and then prices move lower straight down to the close. And again, you can see this area here, some profit taking coming into the market, and then prices rebound to the close. And then once we get to this level, we come back up to the 200 bar moving average. We've now broken through with selling here. And as prices trade up to the 20 bar moving average, you can see that this bar, the volume is more or less the same as the previous bar, but the range is less, and prices have the high and the 20 bar moving average in the way there as resistance. And then prices close back below the 5 bar and the 200 MA. And move lower. They drive through the close, and at this point I was observing this and thought, well, I'll have a punt on this because of the weakness that was there. And then prices move lower and trade towards the DP level, and I'm looking for the the profit taking coming into the market by the shorts. This turns up, and if you just come back to here, here's the actual trade, and then the market traded down to the DP after I was out of the trade. And you can see then how the DP becomes a support level for this market. The prices drive through, and then they start to come back and then work their way back. I'm just going to fast forward to the trade, which will turn up in just a second. Again, you can see now we've got potential weakness here, then the selling coming in. This is after the move back from the DP level. In most cases, you will see the potential weakness or support, potential strength after the up and down moves. And then we had a sell signal, and this is where it all started to become a no news Tuesday, no direction, and nothing to move the market. So prices are sideways. They're already starting to build a sideways move here, and then we have a potential sell signal. The market fills this, and then straight away you see them buying back here with the green bar. And at this point, when we've got a situation where there's nothing to drive the market, you can pull the trade, or you can do, in my case, I waited, which is probably the wrong thing to do, but I had the BRN and the 20 bar moving average, and the market then took out half of the profit I'd made in the down move. And then prices, you can see now we've got a clearly defined sideways range into the end of the session. Things didn't improve in the afternoon as we move over to this. I'll just so we have the start of the session now. Interestingly enough, we had a nice signal in between this, and then again you can see them buying back in or taking profits at the end of the move there. So prices started off sideways, so it was already a situation where we were likely to see this continue throughout the session. And to add to this one, all the way through, if you go back and check the chart, you will see the market came off the DP level as well. Even if it's just gone below, it came back. So immediately here, because of the lack of news and the talks in Congress, the market was subject to the potential for just trading sideways. So the market fills the trade and then comes back and sits on the DP level, doesn't drive through, which you'll see there, and immediately works its way back sideways and up to the exit of the trade, back up to the 200 bar moving average, and you can see there price is stuck at the BRN and then come back, and I'm going to fast forward all the way through here, and you'll see price is showing potential weakness but hugging the 5 bar moving average. And then as we move further on in the afternoon, you will see prices coming back once more, this time managing to trade down to the scalp, which happened to also be the 200 bar moving average there, which you'll see prices trade down to. And again, given it's so quiet, having done this trade, is to take the money off the table because it's not going anywhere. It's just stuck in a sideways range, which you can see there. And then finally, as we head into the close, prices remain sideways there. And then we had a potential buy signal just before the close. Again, you can see how quiet it had become. And this is because, as what we saw at the intro, Congress couldn't make up their minds whether they wanted to pass the stimulus or the second stimulus package. So the trade is filled, the market bounces off the 200 MA, comes back. We've got resistance to the left there where we have the selling there, and prices just trade as close to the scalp as it's going to get. And with it being late in the afternoon, you have to make the decision, and plus the fact the market's sideways, whether you want to take the profits or not and wait and see what the market does. And the market bounced back to the entry point a couple of times, and again you can see how narrow the bars are. We get a bounce off here off the BRN, and then another opportunity to get out of the trade at break even before prices eventually succumb to sideways down, and this signal's not valid because it's already past 4 o'clock where you can see the shaded grey area. And then eventually they move and break the DP level. So as I warned yesterday in the market alert, we've got a no news Tuesday. The thing is with Tuesdays is that if there's all the news from the weekend is factored in on Monday, so there's no new news. And if there's no economic news, then the market is looking for something. That something was Congress to make the decision with regards to this deal, this stimulus deal, and that didn't happen. That got delayed, and that sent the market into a bit of a sideways move. So hopefully things will pick up today. You can see this is also reflected in the implied volatility. This is good news because the lower this goes, the bigger the correction is going to be as soon as the trade deal's done, and also as we head into September as well. And like I said before, I've seen August, the second week of August, where the markets have really picked up momentum and steam, had some fantastic trades as well. And it's a bit odd this year as well because there's nothing normal about this year. And probably be nothing normal about life ever again either since March. But the implied volatility dropping off there, which is good. This really is a good indicator, as we saw before, when prices in the green zone, where it drops, eventually you get corrections coming into the market. And these may look small only because of the sharp move to the downside there in February and March. So the lower the implied volatility goes, the better, or the bigger the underlying trades will be. So yesterday we had no news. Today we have got some news. It kicks off at lunchtime with the ADP employment change. We're looking here at a significant improvement, or forecast for an improvement in the unemployment change. So we'll see what happens at 1:15. We've got the ISM at 3 p.m. and crude oil inventories at 3:30 as well. Overnight, let's have a quick look. You can see yesterday the market did manage to move up to the 20-bar moving average in the 78%. That was at the start of the session. Overnight, prices starting to bounce up a bit, but nothing major. You can see it overnight there, prices move sideways to lower. And again, it's very important to do this to the price chart so you can see where you are in the bigger picture, or where the market's traded in the bigger picture. And you can see that we've gone through the 200 MA, we've also gone through the close, and we traded up to the DP level where the market found resistance, and it's worked its way back down to the 200 bar moving average, and is currently sitting on the close. Move to the upside, it's got the DP in the way, and a move to the downside, it's got to contend with the 200 bar moving average, the DP level here, where we see some buying coming into the market, but a break of this takes us down to the next BRN there. So these are areas that the market will have to contend with if prices are to move lower and also to move higher. So just before I conclude, keep an eye on the dollar index. The weakness is starting to return, where we could see the lows broken here. Still got a long way to go on the in the monthly chart. If I just compress the chart, you'll see we're a long way back down to the 2007 lows, but the dollar is devaluing. All currencies are devaluing. It's just that the dollar is the stronger of the devaluation, as it were. So keep an eye on this, and the more this comes under pressure, the more likely gold is continue to move through and make new highs. This has got a long way to go to the upside, as has the silver market as well, which you know, and you can see there that I've been a buyer of, and prices continue to move to the upside here as well, but there is a lot of catching up to the $50 area. And it will happen, there's no doubts about that, given what I spoke about in the end of the Financial Road Part 2, where you should consider hedging all of your assets, if possible, with some form of precious metals. And you can see that heeding my own advice, owning physicals, etc., that the market is now doing what you would expect it to do, given the monetary system is falling apart before our very eyes, and has been doing since March. And of course, what we've seen already with Pelosi wanting 3.4 trillion printed again. So yeah, by Christmas, the Fed's balance sheet should be over 10 trillion, if not before. And yeah, it's just a matter of watching the slow motion demolition of the economy and the financial system. So on that cheery note, I will conclude for today, and if there is anything to report, I will let you know. As ever, thanks for watching. See you in the next.